Hey guys, welcome back to the channel. So, we've been talking about real estate for a couple days now, so I want to continue this trend and maybe talk about why we even think real estate might be considered a good investment. I mean, is it a good investment? Is it not a good investment? Because, the benefits of investing in real estate, there's just so many, right? With well chosen assets, an investor can enjoy predictable cash flow, really good returns, some tax advantages, some diversification, right? And it's possible to leverage real estate to, really build your wealth, right? Thinking about investing in real estate, well, let's take a look at some of the benefits for investing in real estate and why we would consider it, like a good solid investment, right? The first thing we want to talk about is going to be cash flow, right? Because cash flow is the net income from a real estate investment after mortgage payments and operating expenses and all that stuff has been made, right? A key benefit of real estate investing is its ability to generate cash flow, right? In many cases, cash flow only strengthens over time as you pay down your mortgage, right? And build up your equity in the house, right? So then that's going to move us on to the second thing, tax breaks and deductions. Real estate investors can take advantage of a bunch of tax breaks and deductions that can save money when it comes time to pay taxes, right? In general, you can deduct the reasonable costs of owning, operating, and managing a property. And since the cost of buying and improving an investment property can be depreciated over its useful life, which is 27 and a half years for residential properties and then 39 years for commercial, you benefit from decades of deductions, right? That's going to help lower your tax income. Another tax perk, you may be able to defer capital gains by using what they call a 1031 exchange, right? All right. Well, then let's move on to the next one, appreciation. Real estate investors make a lot of money through rental income and any profits generated by property dependent business activity and appreciation, right? Real estate values tend to increase over time. And with a good investment, you can turn a profit when it's time to sell. If you ever do sell, maybe you want to pass it down in your family or something like that, right? Rents also tend to rise over time, which can lead to higher cash flow. So we're talking about how good cash flow is earlier, and over time, it's only going to get better. So the next one's going to be building equity and wealth, because as you pay down a property's mortgage, you build equity, right? An asset that's part of your net worth, right? And as you build equity, you have the leverage to buy more properties and increase cash flow and wealth even more, right? You're going to keep hearing how good cash flow is, right? That first one, that cash flow, it's a really big deal, and there's a bunch of things that help us improve our cash flow. The next thing to talk about is going to be portfolio diversification, because you know that's a really great benefit when you're investing in real estate, right? The diversification potential. Real estate has a low and in some cases negative correlation with other major asset classes. So this is going to mean the addition of real estate to a portfolio of diversified assets can lower portfolio volatility and provide a higher return per unit of risk, right? Moving on to the next one's going to be real estate leverage. Leverage is the use of various financial instruments or borrowed capital, right? It's another way of saying debt to increase an investment's potential return. A 20% down payment on a mortgage gets you 100% of the house you want to buy. That's leverage. Because real estate, it's a tangible asset and one that can serve as collateral, right? Financing is readily available. Make sure, because, a lot of people, you've heard of people over leveraging, right? You don't want to be over leveraged, especially like this past year, 2020 and all that stuff with the pandemic and all that stuff. A bunch of people got over leveraged and lost a lot of money, right? So just be careful. The next one to talk about is going to be risk adjusted returns. So, the real estate returns, they kind of vary, right? Depending on factors such as location, asset class, and, management. Still, a number that many investors aim for is to beat the average returns of the S&P 500. What many people refer to when they say the market, right? The average return over the past 50 years, it's about 11%. So a lot of people are looking to buy real estate that's going to give them more than an 11% return on investment, right? The next thing to talk about, we're going to talk about inflation, right? It's a hot topic right now here in 2021. Everyone's worried about inflation, and it's just all the prices are going up, right? Because the inflation hedging capability of real estate stems from the positive relationship between GDP growth and the demand for real estate. As economies expand, right, the demand for real estate drives rents higher. This, in turn, translates into higher capital values. Therefore, real estate tends to maintain the buying power of capital by passing some of the inflationary pressure onto tenants and by incorporating some of the inflationary pressure in the form of capital appreciation, right? So, a lot of people say the best things for hedging against inflation is real estate, and then, like gold, right? A lot of people buy gold. Well, of course, a lot of people think Bitcoin is going to be, it's digital gold, right? So that might be another hedge against inflation, right? Only time will tell, though. The next thing we want to talk about is going to be REITs, or real estate investment trusts, right? Because let's say you want to invest in real estate, but you're not really ready to make the jump into owning and managing properties. Well, you might want to consider real estate investment trust, right? A REIT. You can buy and sell publicly traded REITs on major stock exchanges. Many trade under high volume, meaning you can get into and out of a position pretty quick. REITs must pay out 90% of income to investors, so they typically offer higher dividends than most stocks. Okay. So these are some of the best reasons why, right? So what's the bottom line here? What's really going on? Well, despite all the benefits of investing in real estate, there's some drawbacks. One of the main ones is the lack of liquidity, right? The relative difficulty in converting an asset into cash and cash into an asset. Unlike a stock or bond transaction, which can be completed in seconds, a real estate transaction can take months to close. Even with the help of a broker, it can take a few weeks of work just to find the right counterparty. Still, real estate is a distinct asset class that's simple to understand and can enhance the risk and return profile of an investor's portfolio. On its own, real estate offers cash flow, tax breaks, equity building, risk-adjusted returns, and a hedge against inflation. Real estate can also enhance the portfolio by lowering volatility through diversification, whether you invest in physical properties or REITs. So I really hope one of these reasons, showed you why it's such a good idea to get into real estate, right? And real estate has built a lot of millionaires, so, I would urge you to consider looking into it if you haven't already. I really hope you guys enjoyed this video. If you haven't already, go ahead and hit that like button. If you're not subscribed to the channel, I'd really appreciate it if you did. Until I see you guys in the next video, y'all be safe.